So is Africa affected? I mean, we've seen a downturn in the last week on the JSE, but is that a reflection on what's going on in the rest of the continent?
Loretta, I think certainly what's going to be happening now is we've seen sort of massive fiscal stimulus in the last financial crisis in 2008. But something different is happening now. We're now starting to see an age of austerity. And that's going to have ramifications for various countries in Africa, certainly. We're seeing US and Europe taking on measures which will probably lead to lesser FDI coming through into the continent, and certainly perhaps an impact on debt relief and aid coming into the country. So this is certainly going to have an impact in terms of economic growth.
All right, so materially, that's how we're going to be impacted on the aid front, on the FDI front. What about the currency front? Because we do transact in dollars here. If we're seeing a weaker dollar, does that mean anything materially for local countries?
Well, like we see in the previous financial crisis, and naturally when you have a situation like this occurring, there's going to be pressure on the foreign exchange rate. And this in turn is going to be leading to inflationary pressure. We're already starting to see inflation starting to tick up in a number of the countries. This is going to impact on food prices. So even though we're seeing a dramatic shift in terms of oil prices, naturally to countermand that, higher food prices and inflation is one of the things that governments are going to start to need to look at.
I mean, obviously sluggish recovery means sluggish industrial output internationally. What does that mean for commodities producers, particularly those of base industrial metals?
Well, now with commodity prices decreasing, there's going to be possibly a lower demand for these particular commodities. Most of these countries are dependent on commodity exports to balance their fiscus at home in terms of, seeing to their constituents as well as for their expansionary plans. With lower commodity exports or prices, they're going to be seeing sort of lower or a smaller amount of dollars coming into their kitty. So as a result, we're now going to see more austerity measures needing to be implemented by governments in Africa, very similar to what we're seeing our US and European counterparts doing abroad.
Is that across the board? What about the gold producers like Ghana, like South Africa, and new countries that are producing gold like Mali and Tanzania? I mean, the gold price, because of the safe haven status, is ticking up. Aren't they going to see more revenues coming through?
Well, you'll see two things happening. One is that you will probably see gold producers, because of the gold price, seeing more revenues coming through. But let's remember, inflation is going to go up. So the import propensity, they'll probably be paying higher for a lot of the food. But let's not forget, what's happening now globally is there's a contraction in terms of economies. So with this lower contraction, I think GDP growth across the entire sub-Saharan Africa, we envisage, will be much lower.
Right. The growth that we've seen, that's been quite impressive, was really predicated on the resource-rich countries, particularly the oil producers. Just this week, we've seen oil dropping $2. When you look at the benchmark price over the next few months, people are expecting oil to drop to as much as $85 a barrel. What does that mean for the oil-producing countries?
You're absolutely right. I think sub-Saharan Africa has seen this sort of robust economic growth. And that was predicated on really a couple of things. One, it was a stable operating environment. There was increasing FDI, and there was increasing aid flows coming into the continent. Possibly that might see a change or reversal of those particular fortunes. Oil exporters have had a good run. Even through the economic crisis, for example, if you saw Nigeria's budget through 2008, they were probably averaging around $55 to $60 to budget their books. So with oil prices at a higher level, they were able to sort of bolster their foreign reserves. So oil exporters will probably be the safest in that they've built up sufficient reserves to probably weather the storm. But if you look, let's go to a country like Ethiopia. 50% of their budget spending is dependent on aid. Countries like that are going to be the worst hit. So it's going to be time now for probably governments to now batten down the hatchets to prepare for the storm.
Okay, so what are the options available to authorities? Because on the monetary side, we have started to see many governors of central banks and their MPCs starting to raise interest rates. Certainly, we've seen that in Kenya, we've seen that in Nigeria. The South Africans, we're told, are taking a wait-and-see approach. But the general trends?
I think governments are going to become increasingly popular because they're going to have to need to increase interest rates to countermount inflationary pressure. I think also they're going to need to start looking closely at some of their key priorities in terms of infrastructure spend, because they're going to have limited capacity in terms of their budgets. moving forward, they'll also need to be taken into account food pressure, as well as decreasing in commodity spend and demand. We saw that India and China were primarily the key drivers of demand for commodities.
Right.
We're not too sure now whether what played out in 2008 is going to play out now, in whether that demand will be consistent.
So who are those people who can help us weather the storm? We're told to look to the IMF, but ultimately the IMF gets its money from these very countries that are battered by the global situation, the United States and Europe.
I must say, this time around, I think those who can help themselves is ourselves.
Yeah.
I think governments are going to really need to focus on internally and probably implement some austerity measures to get through this one.
Role of DFIs, African Development Bank and others?
Well, I think they're going to be playing an increasing role, particularly in credit mitigation, as what they've done before in previous years as such.
All right, Suresh, thanks so much for coming through. And I know you came through with a groggy throat, but you've managed the flu.